All right, let's get going. Welcome, everyone. You are looking at the weekly chart in oil. So a nice push up into towards 78, 80. So I'm buying pullbacks on this oil, looking to see, and already we're pulling back into last week's level. I would love to see 75, but it's a big week this week with Fed and Bank of England. And also monthly jobs as well. We've got monthly jobs this week, so big data week this week. So not looking to jump into this market feet first, but just hoping it can grind back to 75 here and then pop up to 80, 82. All right. So have a quick look at Bitcoin. Bitcoin has been very volatile. Ran up on prospect of getting an ETF signed off, pulled back when it appeared that there was some, it wasn't certain as some people thought. I mean, the bottom line is just ignore the news. The markets will price it in. Buy the rumor, sell the news appears to be working so far. But listen, I mean, just um, if this is getting the volume on dips here, then I would suggest you keep buying until it stops working. So we saw a low of 38,600, already 5,000 pips above this. So this is a big volatile mover. If you're not regarded as a professional trader, then back off. And just my best suggestion is oil. Let's look at gold. Gold's not been going anywhere for a few weeks. We're tucked in ever since we saw that big flare up and drop early August. We've stayed in that range. So we are not going anywhere and we're getting lower closes. It could fire up. It's bullish all the time. We sit inside that apex. I think dips to be bought. Um, even some at the moment 2020's got bought. Here we are, 2028. Uh, you know what, if we see a lot of volatility around the Fed day, I would buy a dip. And I would love to see that go under 2000. 1975 would be one of the prices I would look at. So in other words, if we come and sit back in this trend line and look at some previous support levels right back here at 1992, 1975, and so on, I would bid on those numbers and see if that can work. Moving across to the dollar, I think all eyes on the dollar. So pretty flat last week, early part of the week, no real direction. So ever since that dip in December, we are picking up. So we've got a trend line just above us. So what's the trend at the moment? Let's put the 50-day average on this. Oh, didn't realize that color was on there. Okay, let's leave the color on. If we, so we've stayed under, we're just about finished on this weekly 50-day average here. And we're just raising our head above it. So if this dollar, if we stay above the 50-day average and continue higher this week and break the 104 mark, then I can see us popping back to those November highs. If that's the case, then that could spook the market. I mean, generally speaking, a high dollar is not good for the US markets. All right, so we've got this push up. So the markets have done okay on the back of this strong dollar here, as we'll see in a minute. But if we spike up, then be careful. If we can't go any further and eventually close the week underneath this 103, then that bodes well for the coming weeks. Right, down. So keeping this theme of the 50-day average, you can see one of the main concerns here is, and it's good to have this color zone on this chart. One of the main concerns is that this index is at the top of this channel. You can see from the high of December 22 to the highs of 23. We are closing high, but we're struggling. If this proves to be the top of the channel, then, and we are very distant from the 50-day average. If we close under 37,700 this week, then again, hold on, because this could be about to pull back. And this is a very, very aggressive wave pattern up here. It looks, I would say we're still pretty much in that first wave. So as with the wave pattern over here, we had a 1, 2, and effectively a very aggressive 3 up here right into May 21, and then got pullbacks. Well, this is a very, very aggressive wave 1. If this is wave 1, then we at the very least need to pull back to 37,000 at the very least, I think. If we drop to 37,000 and hold, then we could go into 40,000. So no reason to sell at the moment, but there is reason to be cautious. Look at the FTSE. Now, the FTSE had a good week last week. That's come off a key level of support, closed above the 50-day average on this weekly. So the FTSE looks as if that's got more steam, more energy to go at least and retest 7,800. If we are able to break through 7,800, then we're going back to the highs and maybe beyond. So no reason to short this at the moment. But yeah, at the moment, keep buying dips. I think the next decent dip is 75.90 to see if we can get to 8 through 77.5, 77,700 and back up to those highs. All right, so if I pinch back, you can see that we are bullish with that decent close on the week, bullish above the 50-day average, no reason to sell. In fact, every reason to buy dips at this stage. Stay tuned for any possible reversal. Right, we'll just look at a couple of stocks and then I'll leave it there. Let's look at some bellwethers like the Lloyds Bank. It's dropped back to support. This is if you are bullish on Lloyds Bank, you should be considering these dips, 40.41. We're here at 42.25. A lower red on that chart, that's really pulled back quite significantly, so I can just keep these charts still. Barclays. Barclays has fared better. That's a buy signal on the weekly. Always be cautious with a market that can't close above the 50-day average or 20. And this has not broken above it's not held above the 50-day average, hence the pink zone. So the buy area is 145 with a stop under 140 to see if that can go back to 170. If you are a very cautious investor and very concerned about your risk exposure, stay away and wait and see if we can close above 150. Right. I want to look at miners. Good week on Pan African. Looks as if we could come and see 20. Any pullback to 15.16 is viable. Rothschild. Decent couple of weeks. Well, that's really, see how the 50-day average has played a key part in that. It's held that, and this is closed above it last week. So that is looking better. It's looking worth a buy, put it this way. You see a pound this week, get a stop underneath 85. Doesn't have to be that far away. And then see if that can start to really pick up and get bid much higher up. Okay, so let's look at some others. Let's look at Vodafone. Because I like I think Vodafone's a buy down here at 69. Don't hang around if we get under 65. So you get a pretty tight stop on this. The reason why I like it is because we're holding, it's a major level. We had a big push up here in December. We've closed above this 69, and now we're just pulling back into it in this early part of the week. So if that can close the week above 70, I think that could get bid up. There is a story on this, a merger with three, but we'll see how that goes. So BT is very sluggish, but it's a huge area of support. And we did close higher last week. So I think that's worth the risk buying down here at 110 or 112. Get a stop underneath these recent lows. So you can get a very tight stop again. And just be prepared to lose money, basically. Be prepared to accept risk as you know, that's the name of the game, isn't it? That's the absolute name of the game. But you know, don't go in there and load up thinking you're gonna make your year's money in a week. I'm like to think that nobody that watches this would do that, but just to a word of caution. Right, QQ, been on a sweet move. So look at that. It got hit right into 290, and here we are at 360. All right, I'll leave it there. But so my overriding thoughts, there's no reason to sell this market. A lot of data coming out. I am personally buying dips, but in key markets as discussed. But I am managing my risk very carefully at this stage.